Great. So before we dive into questions, it would be great if you could just give like a brief kind of intro about yourself and what you've been working on for the past couple of years.
Yeah, definitely. What's the audience is pretty much everyone from the blockchain Columbia, right?
Yeah.
More or less.
Yeah.
Okay, that's good. Yeah, yeah, amazing that everyone is here. So I don't know if you're distributing pop-ups for for the attendance, but
we should do that.
Definitely, yeah, definitely, worth to consider. Yeah. So yeah, but some introduction. So I'm Stani. I'm the founder and CEO of Aave, and Aave is basically a team that is building Web3 protocols and giving those protocols to the community ownership. And we started to build DeFi past 5 years ago. So we started the first on-chain lending protocol named ETHLend, short for Ethereum lending, and something that we eventually evolved into Aave protocol. And Aave protocol is one of the most biggest and also like cross-chain DeFi protocols out there. And essentially, I don't know how aware all of you are, what is DeFi or what is Aave, but essentially, it's all about providing different kinds of digital assets into the protocol without giving custody to a third party like an exchange, and then you're earning interest on those assets that you supply. And at the same time, when you supply liquidity, you are able to use that balance as a collateral to borrow other assets from the protocol for various purposes. Very common type is that you supply ETH or let's say Aave or wrap BTC, and then you borrow stable coins to unlock liquidity. And the protocol itself is decentralized, which means that it's running on the permissionless Ethereum network, meaning that it's pretty much accessible in wider context. And you have now over 100 different access points into the protocol itself. So it's quite decentralized, and decentralized in the form of how the protocol is governed. So all the Aave token holders, they basically come together and vote or create proposals and vote on different kinds of topics. Might be how the protocol will be upgraded in terms of smart contracts in the future, or might be related to different kind of risk parameters. So the governance is either adding or subtracting risk, and they're also governing the DAO treasury. And I personally found my way into Ethereum. I was still studying law back in the a few years ago, and I was trying to figure out like how we could use technology to improve commercial contracts and avoid disputes, and or at least like make disputes more efficient and contract execution more efficient, and stumbled upon into smart contracts, which kind of like was for me very interesting concept, because you could actually create contracts and code that self-executes without intervention. And I was building before law school, I was building for years fintech applications. So for me, it was naturally kind of like to apply it into finance. And this was very early. I mean, there wasn't the concept of DeFi. There was one decentralized exchange, Ether Delta, and nothing much in those days. So it was very, very early. And I think DeFi probably had 5 users back then. So yeah, that's kind of a short story of myself.
Good. Thanks so much for the introduction. I think kind of just starting off, I've always been curious, how did you actually maintain conviction in the idea of on-chain lending from ETHLend to kind of what Aave has become now?
Well, it's constant iteration in the sense that when we designed ETHLend, the environment itself was, we had different kinds of assets, and ERC20s reminded more NFTs than anything else in terms of liquidity. So, for example, many of these ERC20 assets, there weren't many in the first place, but were low in liquidity. And our kind of approach was more of a peer-to-peer model to pretty much allow wide acceptance of assets to be used as a collateral to receive liquidity. And essentially what happened is that we saw AMMs coming with Bancor, Uniswap, Kyber actually in the first place as well. And that created more on-chain liquidity, which created more better data and transactioning. And there are a few other dexes were coming in. So you started to have this like composability as well. So for example, usually you build an application in quite silo. So let's say here at the smart contract, here's what the application, we call them dApps, like decentralized applications will do. And now essentially we see more building in terms of like on top of the composability. So you might have a product that interacts with Uniswap, interacts with Aave at the same time, or Maker or something else. And that time, like it started to become more obvious that you can do very cool things if you just use the whole like metaverse of financial applications and protocols built on Ethereum. And what happened is that we started to iterate more, as the liquidity pools started to prove their kind of like a nature, as you could pull the liquidity, so you didn't have this peer-to-peer relationship. In that moment, kind of like pulling liquidity and creating this kind of like a ability to earn yield and let the smart contracts to handle the operations, whatever is the actual interaction for the end user, whether it's swap or a borrow, was possible. So it's kind of like a iterations of different milestones in DeFi that made people realize that pulling liquidity is very capital efficient. And that led to essentially to the Aave protocol with flash loans and everything.
That makes a lot of sense. In like 5 years, actually, what do you think the split will be between people coming and using kind of the core like Aave front end and or accessing Aave through some other UI?
Yeah, I think quite big amount of liquidity comes from elsewhere than the UI. The UI itself is decentralized in the sense that it's hosted on the IPFS, and for example, the Aave, the website itself is pointing towards that deployment. So essentially, like it's already kind of like community-owned front end. But I see that most of the liquidity definitely will already comes from other sources, other front ends. It might be InstaDApp, it might be a wallet integration, or it might be some institutional integration in the backends, which provides that liquidity. But in the future, I think that becomes more and more obvious because receiving yield in a decentralized fashion is a very I would say like a scalable product across finance. So I could imagine that not only custodians offering yield on top of DeFi, but we'll see also, let's say, fintech companies getting into the space and holding the custody of their clients' assets, especially when it comes to crypto dollars. They will pretty much create ability to convert them into stablecoins and deposit. And of course, like the more better the UX is, the more adoption we will get. So I think that will be just like natural, organic direction. And the Aave community itself, I don't think there is like that much of a big like emphasis on the actual user interface. I mean, user experience is important, but essentially the community is governing the protocol and improving it. So I think the focus will be, at least for now, what I understand from the kind of like community sentiment, that it will be on the protocol side.
Got it. That makes a lot of sense. And when you were just giving your introduction, you described Aave as like a Web3 kind of company and not just like a lending protocol. There's some kind of non-lending projects that are on Aave's roadmap and how you're kind of tying it, like, and if those are related to kind of the core lending protocol, how are you tying that in?
Yeah, I would say, well, as a Web3 builders, we think, DeFi essentially was very important in the beginning, to establish a financial infrastructure on top of an economy. Every economy needs finance, whatever that economy will be like I mean, everything that's happening in blockchain is pretty much what's happening in, economies and finance in general. So that was the first thing that had to develop. And I think current state of the DeFi is pretty good. I think there's a lot of things to innovate still, and we'll see a lot of innovation for the upcoming years. And it's constant innovation, because you can't build moats around what you build in an open source environment where everyone sees your code. They can take your code, improve it, and redeploy it with a better model. And this constant innovation is what leads to better also like opportunities to everyone. And I think for Aave, we think one of the next things that we want to see being built, and we kind of like started ourselves building it, is decentralized social graph. So now we saw the growth of DeFi, and we saw the growth of creator economy. So a lot of creators coming into the space in expressing in form of art, music, videos, and essentially selling them as NFTs. And these NFTs became kind of like communities around those creators. So there's like a big movement of the creator economy. And one of the things we want to we see that it brings is a lot of social capital into the space. So let's say, blockchain is about storing value and transacting with that value in a programmable fashion. And many of, for example, governance tokens have an element of social capital, because you're as a community backing a particular project, and it has its own culture. But especially with NFTs, that social capital is represented even more, especially when it comes to membership tokens and NFTs in that sense. But also when it comes to social graph, this is something that is missing, where different users can actually create profiles and link their relationships and store them on chain, and pretty much have abilities to store their own network and social capital, and have a distribution channel of their content to their peers. And this is what we're working now. And the idea isn't to solve social media completely, because we think like decentralized way to build things is where you build one particular building block and kickstart a community and economy that way. So for example, we're solving the ability to store relationships on chain and have the social graph. But for example, someone can come and solve actually the part of having content moderation on chain, or something else, or just improve the modules that we already have. So that's like kind of like our current focus. And another one is related to NFTs, but also a bit DeFi. So we're building a protocol related to NFTs, using NFTs as a collateral. So those things are now kind of takes most of the focus, and the institutional Aave Arc market as well.
Interesting. What are kind of some of the challenges that you guys are working to solve for using NFTs as collateral? Because I've been seeing like a lot of kind of smaller protocols pop up. So I'm curious, like, what's the direction that Aave is taking?
Yeah, I would say like the challenge is, I don't think of it as a challenge. I think like when we look at NFTs, we look at them in a way that we're looking like ERC20 tokens, and all this like discussion related to liquidations and how that potential could happen. But if you look really closely, like NFTs are a bit different, right? So they are, they are non-fungible assets, but at the same time, they might be liquid or might not be liquid. And I mean, it does, like, depending on the approach you are taking, for example, you can use liquid assets, liquid NFTs as a collateral, but the kind of like our approach is more about like how a community can come and back a particular project with funding, and those like NFTs are used as a collateral. So essentially, in our approach, we're looking more of a kind of like a pooling community approach than a peer-to-peer fashion collateralization. And I think most of the NFT projects out there are actually focusing on this, peer-to-peer way of, bidding and, having this relationship, pretty much like what we did with lending. I mean, the first liquidity protocol, it landed back in the 2 years ago. So I think that our approach is a bit more of how a community can actually, take that long tail risk of particular collection and provide liquidity.
Oh, fascinating. Kevin asked in the chat, what are your thoughts on how under collateralized lending can start to be introduced? Thoughts on different methods such as ARCX reputation score using social capital as proxy for trust, numerate type model, etc.
Yeah, it's very interesting. Or for example, the agent score. So yeah, I think it's like the beauty of blockchain is that you have all this data available. So let's say that in normally when you are trying to kind of like apply for a loan under collateralized, you basically have to, there's public information available, plus you provide information to the financier. But in case of like when we have on-chain data, what it means that you have different kinds of proofs of events or proof of actions that you have taken previously, and you kind of like create a profile out of your transaction history. Transaction history doesn't mean necessarily that you send one ether from one address to another, but it might be, for example, that you participated one particular event and received a pop for that. You participated into something else, or you are active users of different protocols, and you might have high health factors on, let's say, you have high health factor on, for example, Aave, and you're kind of like a very conservative user. So you expose a lot of data, and this all data can be used to give loans out. And I think the biggest problem with, and I'm talking about like under collateralized lending in the form that you don't have to expose your identity necessarily. And the issue is that we always think to like overthink how lending works, because the main argument usually is that, okay, so if you have this like transaction data, you get a loan. What happens if you don't essentially return the loan, or you kind of make this exit event? And I think like we have to take an approach where looking to back when lending was born. So for example, when you didn't have registries of credit scoring or any of that kind of data, and you had this trust element, and based on how you interacted with other people, you might get a loan, for example. But there isn't necessarily a way to actually repossess and reclaim or have a actual legal recourse on that relationship. And it's totally fine, because it's a way of actually creating new type of a finance where it's not about actually recourse, it's more about reputation and what kind of reputation you build over long term. It's a long answer, but like it's and very theoretical, but I think it's just like the problems are in the theory than anywhere else, like when it comes to like under collateralized loans, because technically you can do credit delegations in the Aave protocol as a depositor to someone who doesn't have a collateral, and you can create that under collateralized relationship, but then it's all about the data and who you will lend to.
That's super interesting. Jern, go ahead.
Hi, Stani. Thank you very much for coming. And
Hey.
yeah, like I always like admire Aave, and yeah, basically like a bit more specific, like Aave has inspired lots of protocol, and I'm not sure whether you heard of like Rally Fields, which is like the permissionless money market. Like they claim themselves to be the protocol that allows people to create a pool like Aave, like they have like their own assets, their own interest rates. So like I would love to hear your thoughts on this approach. Like instead of like having Aave with 5-June like risk parameter in Aave pool, we have like the protocol that allows people to create their own pools with their own like parameters and those stuff. Like they could like permissionless. So like want to hear like, your thoughts on this, and like yeah.
Yeah, I think like permissionless listing definitely is the future, and somehow when there's like tokenomics and the governance involved in some way. But I think that the issue is like we've seen some of the permissionless listings, like it, especially like with liquidity protocols where you have a collateral, you need to be very, very careful what goes into that protocol. And I mean, we saw yesterday the Rory Capital's fuse kind of like a Oracle exploit on the one particular pool. So it just showcases that with asset listings you need to be extremely careful, and in a permissionless environment, every community wants their asset to be listed without necessarily the understanding of what are those would say kind of like a risks involved, and usually people don't think about the risks until they start to mature, and when it starts to mature, it's usually like too late. and I would say kind of like, you know, whatever assets are listed, they should also like they should be in terms of like risk parameters suitable for when the market is decreasing substantially in terms of like the collateral values. I think like when you have borrow caps, supply caps, exposure caps, that helps to create like kind of like a limitations of the exposure, and at the same time create something like permissionless listing. But then of course the liquidity is limited. But I think like at Aave we have some ideas on how it could be done in an interesting way, and probably that will be in our next version, I would say.
Thank you.
Olga-Khan, go ahead.
Thank you so much, Stani. This is a great conversation opportunity for us. I just wanted to ask a question about the lending business environment and overall. This is going to be a kind of high-level question. So, as we see that as Aave, Abracadabra, Cream Finance are going interoperable platforms, they are integrated with different blockchains, and on the other hand, there are some incentives applied by different blockchains within these lending protocols. How do you see the future of lending business and blockchain industry? What would be the trends and developments will be the winning across the blockchain or platforms such as Aave? Who is going to win this game and how?
Well, I think you know, I don't think there's like a one winner. Like everyone who is in Web3 is a winner, and that like it's not just like the people, but also like the protocols. Yeah, and you know, as it's more about the communities actually being constantly in a mode of innovation. So as long as you innovate as a community, whatever you do, you always have followers and people backing you to succeed and using your products. Like that's the main thing, innovation. And I think essentially like there would be like an environment where you have multiple different blockchains, and that's totally fine. You know, each and every blockchain is its own culture, its own ecosystem, and peculiarities. So that's definitely like more than welcome. And I think like for us at Aave, we try to be as inclusive as possible and be in various different networks to basically have that accessibility to those communities and being able to serve them. And I think those networks that are focusing more on scalability, you know, with proof of stake or layer 2 solutions are quite interesting. For example, we have now more substantial more users on Polygon, for example, than we have on layer 1. So it just showcases as well like the different user type, especially within Polygon, the deposits are way more smaller, and in terms of like the layer 1, the deposits are way more bigger, but the amount of depositors, for example, in Polygon is way higher.
Yeah. Thank you.
We have another question from the chat from Connor. Said, how much demand are you seeing from institutions? What are their biggest concerns about entering the space?
I think there is a lot of interest for institutions. I would say that mainly like kind of like our institutional demand is going towards the Aave Arc market, which is initiated by Fireblocks, not just only for their clients, but anyone who passes their kind of like a I would say like a process. And essentially what happens is that in the Aave Arc market, there is this kind of like a whitelister functionality. So basically Fireblocks being one of the first whitelisters, and they can whitelist depositors, the suppliers and the borrowers and the liquidators, essentially their peers are knowing who are participating in that market, and that brings kind of like more certainty for institutions participating in DeFi. So there's all the DeFi characteristics, but the difference is that it's segregated liquidity and a private market. It's kind of like a sandbox for institutions to try out, smart contract based execution, and the transparency. And at some point, when there's more legal certainty, they can move towards permissionless DeFi.
There's another question. Go ahead.
Hi, Stani, and yeah, please let me know if this is like confidential and those stuff. I'm just thinking of what you said, like how to make like an Oracle like less vulnerable to manipulation in like permissionless setting. Is it possible to give like a brief overview how you like would approach that if you're like thinking of doing like permissionless money market? And yeah, feel free to let us know if that's like confidential and not.
Well, I think kind of like the Oracle part is a good point. So you need an Oracle, of course, but something like Chainlink is interesting to use. But I think like the Oracle space in general, it's still a bit in a way where in a phase where we should see more innovation coming in. There is more and more kind of like a need for like better and more scalable oracles and more decentralized, because essentially oracles are kind of like the Achilles heel in Web3 and DeFi especially, and we kind of need to find a way to innovate on this particular area. I think we don't have any special like oracle in mind at the moment, but it's definitely an area where we want to innovate or at least see innovation from others. Maybe you can create the next interesting oracle.
Yeah, just curious how you gonna like prevent the risk from like truly permissionless money market if that's like Aave is heading to. Just curious.
Yeah, in our case, like we have a function where the listing can in a version that we are planning now, where the listing of a particular market can be given to, let's say, a risk DAO, or it can be given to another contract, which can allow the permissionless listing. But the actual mechanisms, how you create permissionless listing, whether it's with token economics or some other way, that's still yet to be defined. That's something that the actual community can build as the foundation of the feature is added.
Thank you.
Alston has a question. What are your thoughts on stablecoin regulation?
I mean, it's a hard question, because I personally I think stablecoins are very important for the Web3 economy, but like how, and especially like how to regulate them, it's still open question, because essentially stablecoins they have proven themselves useful in our economy. I would love to see more decentralized stablecoins that are more scalable. I mean, DAI, for example, is heavily backed by USDC, so it's not there where we want it to be, of course, as a community. But in terms of like regulation, I think it's still like very early to regulate anything. Everything that is in DeFi still is quite experimentational. But at some point, if it reaches scale, you need to think about like where does the regulation play and what to regulate, because these protocols are decentralized. They're operating in a permissionless network, and it's kind of like the ocean, it's the seas and the oceans when we look at DeFi, and then you have the Coinbases of the world are like the ports that are regulated. So maybe something like that might be interesting. So let's say that, maybe DeFi is not regulated, but maybe the issuer of the stablecoin, if it's a centralized entity and has custody of the funds, that might be regulated.
Actually, kind of on the back of that, what are some like novel algorithmic stablecoin that I guess designs that you're most interested in, or the people they've been thinking about?
Yeah, I think something that doesn't like require like centralized entity, that it can be issued in decentralized fashion. But at the same time, I would say that at the same time, it's scalable. So many of the decentralized scale up the stablecoins aren't just scalable at the moment, and that is the case. For example, DAI because it's backed heavily by another stablecoin which is centralized. So those kind of experimentations are most fascinating to me.
Interesting. And you mentioned that actually the bulk of kind of Aave users are from Polygon, but I mean, I think one issue we've seen is that there's kind of a lack of good like direct to L2 on ramps. Is that something like you see a lot of people working on? And also, do you think that Aave being so kind of like aggressively cross chain, especially like early on, are there some disadvantages to that?
Yeah, I think kind of like we'll probably see more ways to onboard into Web3. Like now, like especially like all kinds of like on ramps are interesting, especially on layer 2 or Polygon. Also, like some of the stuff is interesting. Like one way to on ramp new users is by allowing them to create something. And I think NFT space is interesting because you kind of like onboard users by letting them to create art, for example, NFTs, and they sell them, and they get ETH, and they're part of the economy. And maybe something similar we'll see, like where we are actually onboarding more people through the work. You're working for DAOs, and and that is something that basically allows you to onboard into the Web3 ecosystem more better. Like Aave itself, I mean, we're focusing mainly on building protocols at the moment, but we constantly are thinking like how we can onboard more masses, whether it's user experience or something else.
Interesting. Yeah, does anybody else have any other questions? Actually, I mean, another question I've had, because obviously, like you guys and Compound are kind of the two dominant like lending players in the market. Why do you think it's evolved to be that way? And do you see it staying that way, or will other kind of newer lending protocols maybe come in?
I think it's because it's very hard to build a protocol like Aave. It requires a lot of work on smart contracts and a lot of reviews that especially when you are innovating at the same time and you want to create secure code. So it's just like something where Aave has reached very good sweet spot, so we can innovate a lot but do it in a secure fashion. And it's not only because like we usually, like for example, when you see protocols going mainnet, they have 1 or 2 audits. Aave has in the version 2.5 audits, independent audits, and formal verification on top of that. So it's like the security aspect is very big there, and building a protocol like Aave takes a lot of time, a lot of resources, a lot of cost. So that's like main reasons, but also like I think also the Aave community has been very good at what kind of assets could be listed into in the protocol, and that has reached a lot of scalability. And also being cross-chain, I think we're the only protocol that actually has cross-chain governance, which means that you can vote on layer 1 on a decision that affects Polygon, and this voting is happening, like it's activated and it's happening quite soon. So I think we will see soon a proposal on Polygon that you can vote on layer 1.
Fascinating. So people can actually vote on chain on Polygon and then kind of affect people on layer 1. So is there any like Aave delegates able to vote on like whichever chain that Polygon that Aave operates on?
Yeah, exactly. Avalanche, Arbitrum, and that's pretty cool. That's very cool for your association, especially I think you're one of the delegates in the Aave ecosystem, and that's going to be very, very cool. And as a as blockchain Colombia, you know, it's kind of like an important role because you're kind of like governing the future of finance or future of France, but also like you're governing like probably the future other than DeFi protocols. So it's very valuable work. And you know, my kind of also advice to you all is that, you know, like have some findings, you know, not just vote on different decisions, but you know, trying to vision a bit like how Web3 will look in the future, and how this kind of like a governance will evolve. It's very fascinating what you're all doing as well.
Yeah, I mean, yeah, personally, I think it's probably the best opportunity we have to actually like make an impact and get really kind of engaged in this space. So no, it's great. Yeah, and just a quick question for Adrian and Ross ask theirs, and then we can probably wrap up. Yeah, what actually is interaction between kind of like the Aave core team and the governance delegates? Because I've been seeing like different iterations across different protocols.
Yeah, I would say there isn't that big of interaction. Like for our, what's important for the Aave team is that, you know, all of these delegates, they can, you know, individually participate, well, as entities or whoever is delegate, and make decisions within the protocol that matter. Like for us, like our job is to build protocols, improve them, you know, and give them to the community ownership. And in terms of like what we want to see more decentralization. We want to see more better user experience, lower gas costs on voting. Like we want to make governance as easy as possible.
Yeah.
So we support everyone. We don't ourselves delegate proposition power, but there's a lot of stakeholders in the ecosystem that are happy to do that.
Yeah.
And yeah, that's the current relationship.
Great. Adrian, go ahead.
Yeah. Hi, Stani.
Hey.
I have a question. So in the long run, how do you think like the major bulge bracket banks will react if more and more institutions are eventually landing on protocols like Aave and Compound? Like what do you think? Will they react? Because right now, also in the club, I think we have kind of a feeling that they're completely missing out, which is exciting because the structures there are maybe a little bit less exciting. But I want to hear your take on that.
Yeah, I agree. Like, you know, they're a bit missing out, but at the same time, they all know that DeFi exists. So, I mean, we talk to banks on a weekly basis. We talk to a lot of people. I mean, I was presenting the Aave protocol to a bank 2 days ago. So they all know that the area exists and it's an interesting opportunity, and they know, you know, it's not only a software. These are protocols. These are cultures, and essentially they are governed by, you know, decentralized governance. So at some point probably they will participate, because it's very difficult to create a parallel DeFi where, you know, this is only going to be the bank DeFi, because of the amount of innovation that is happening in open systems like permissionless DeFi. And I think the only way is to kind of like join the movement at some point when they're ready, and that might happen sooner than we expect. I think so.
Ross, go ahead.
Yeah, thanks, Danny. I'm curious about your like whitelisted product. I think it's Aave Arc. Who are your like target clients for that? Are they like real money managers, like insurance companies, pension funds, sovereign wealth funds? Who are you talking to, and where do you see the direction of that going?
Yeah, I think I think more the customer base is like whitelisters, like customer base. So whitelister can be like a custodian, or it can be a bank, and they're whitelisting either their custody addresses or their users addresses if they have permissionless products. I mean, non-custodial products, like for example, Firebox does have. And essentially, like I think it's a way to onboard more funds into the space as well, and more institutionals. And I think like it's the cool thing about the Aave Arc is that you can always deploy a new Aave Arc market, you know, with amongst few peers if you want higher compliance requirements or something else. So, but it's purely for institutions that are looking for yield in DeFi or being able to unlock liquidity as well.
And then Orcon asked, do you think incentive programs on lending protocols are sustainable? If not, how do you think users are going to be attracted?
Are what sustainable?
Are the incentive programs and lending protocols?
Oh, yeah, I think they are, in the sense, like US dollar has always had, incentive, like inflation, right? In the dollar itself. The thing is, like, the inflation is going elsewhere. It's going to, it might go, usually it ends up into investments in stock markets and inflating the prices. But if you are able to use inflation and fees, generated fees, together to give them back to the users and use that for your growth marketing, that's very good for finance. I mean, for any product, imagine taking, Uber from one place to another and getting a bit of Uber equity. I think it's a very interesting model, and it definitely is here to stay, at least for a while. Like, especially like depending what are those rewards, like what they're governing and what they allow you to get access to.
That definitely makes a lot of sense. I think it's a pretty apt analogy. And just to close, what's the best way for students kind of like us to get more involved with Aave and DeFi in general? I mean, you mentioned governance, being involved in governance, but are there any other ways? Yeah,
I think the forum is good, like governance.aave.com, and just actively participating. It's just like I definitely would like to see more participation on that part, and it's enormous opportunity to express yourself and ideas and be part of the community. And especially if you're looking to create a Web3 career or just be in the ecosystem one way or another, that's the best way, in my opinion. And of course, there's always discussions in Twitter, everywhere. You can always reach me out if you have some ideas to share. Always looking to help you out, and of course the other Aave fam team members too. So yeah.
Great. Good. No, this was fantastic. Thanks so much, Stani. Really appreciate it.
Thank you so much, and amazing that you guys are participating. Not only in this, but and you have this initiative, and it's very important to the whole ecosystem, not just for Aave. And it's just like DeFi and Web3 is just amazing movement, and it's nice to see like you all being part of the whole culture. So very excited.
Thank you so much, Stani.
Thank you all.
Take care. Bye.